Hello and welcome to First Bank Center for Family-Owned Businesses webinar series. I'm Mike Vandervelde and I'll be your facilitator. Today, we'll learn how to leverage SBA programs to help finance real estate acquisitions. And just a quick reminder, the lines are muted, but at any time, please send us your questions through the webinar tool. And at this time, I'm going to pass it over to the host of our program, Mr. Joe Ambrose.
Thanks, Mike. Good day to everyone and welcome. I'm Joe Ambrose, Executive Director of the First Bank Center for Family-Owned Businesses. Through the center, First Bank takes a holistic view of family-owned enterprises and delivers services to them beyond traditional banking products. These services are centered on insight and advice that address the family component of family-owned businesses. Today, we welcome Kurt Chambliss, Executive Vice President of TMC Financing based in Oakland, California. He brings with him over 20 years experience in SBA 504 financing. Kurt, along with our Northern California Commercial Banking Director, Jim Hatter, will discuss the benefits to your family-owned business 504 financing to aid in estate and succession planning. And now, without further ado, Jim and Kurt.
Joe, thank you. I appreciate the introduction. All in the audience, I think you will enjoy the presentation today. Kurt brings a wealth of knowledge and information. I've known Kurt for a number of years and have been the beneficiary of successful SBA transactions that he has sponsored. With that, Kurt, I'll turn it over to you.
Good morning, everybody. Thank you for having me, First Bank, and I hope my presentation today is enlightening and gives some good information for everybody out there who has questions about SBA financing and how it might benefit your family-owned business. So, without further ado, let's get started. First, a little bit about TMC Financing. TMC is what's called a certified development company. We're certified by the SBA to work on one particular loan program called the SBA 504 loan. And if anybody in the country wants to get an SBA 504 loan, they do need to go through a CDC in order to get it. So a CDC is basically like the outsource arm of the SBA. You don't talk directly to the SBA. The SBA has these certified development companies throughout the country, and that's who you apply with. The certified development company works with a first mortgage lender like First Bank, and together we provide the financing. I'll give over some more details as we proceed, but just know there are about 230 CDCs across the country. We all offer the exact same rates and fees because it's a standard program set by the SBA. But you want to work with the CDC that your bank likes and is comfortable with. TMC is the #1 CDC in the Western United States. We do a lot of deals, and we have some good experience. So hopefully I can share some of that with you today. Next. The main program is providing commercial real estate financing for family-owned businesses, also known as small businesses, that want to purchase a building for their business versus paying rent. We do a wide variety of different property types, and we work with a wide variety of different types of businesses. We do a lot of medical and professional offices. We do warehouse and industrial properties, and we can even do special purpose properties and some unusual properties. The types of businesses, a wide variety. Pretty much any for-profit business is an eligible business. There are some size standards, which I'll get into later in the presentation, but many businesses can benefit from this type of financing, and I look forward to showing you how. Next. I'm starting with a slide here just to give an overview of the program and how it works. So this example is showing a $5 million building purchase, and with that you could include improvements or equipment, some other items, but in this basic example we're just going with a $5 million building purchase. The applicant would get a loan from the bank, First Bank in first position, for usually 50% of the purchase price, or $2.5 million in our example. And then the SBA, through the CDC, would provide a second mortgage on the property up to 40% of the purchase price, in this example, $2 million. And then the applicant only has to come in with a 10% down payment. Unlike some other SBA programs, very rarely, go back up 1 second. Unlike some other programs, SBA, we very rarely take a lien on somebody's home or other outside collateral. It's just a loan on the subject property, and the terms that are provided are very favorable. You can see in the blue square below, First Bank has obviously a good rate. They're going to be at 50% loan to value. The SBA rate in second position, or SBA loan in second position, is a 25-year fixed rate loan, currently 2.93% fixed for the entire 25 years. So high leverage financing and very low rates make the program very, very favorable to small businesses. Next. Kind of touched upon this in the last slide. Little as 10% down payment, no additional collateral. Most people are going with a 25-year fixed rate option on the SBA piece. We do also have a 20-year fixed rate and a 10-year fixed rate. All of the loans are fully amortizing, so there's no balloon payments. A 10-year term is only going to have a 10-year amortization, so that the payment will be pretty high. But sometimes that's the right product for the asset being purchased. We don't have a limit on the total project cost. We've done projects as high as $25 to $30 million purchases. I would say the average purchase price is around $2 million, meaning you get $1 million loan from the bank and then $800,000 loan from the SBA. We do building acquisitions. We do financing for improvements. We can do new construction, ground up construction. We can do equipment only projects. And we can even do some refinance of conventional debt.
Kirk, before we move on, quick question. You talked about equipment only projects. Can you tell the audience what type of equipment the SBA will finance?
Sure, good question. Equipment only projects are a little unusual. We don't do a lot of them, but when the right opportunity comes, it can be very good product for both the applicant and the bank. The main thing to look for is it has to be a long-term piece of equipment that you're buying. We can't do short-term equipment like computers or servers or things that have a small, short economic life. But if it has a longer economic life, we can use the SBA program to match the term of the economic life with the loan term. We're doing one right now with you guys. Actually, it's for a forklift, and the applicant is able to use this program to leverage 90% of the purchase, get a nice long 20-year. I think we're going to do a 20-year term on the forklift, and a low rate, and I think it's a really good project. The rates that the SBA offer are usually below market. Just the way that the program works is the rate is set by a bond that's sold in the market, and that bond is guaranteed by the federal government, and investors buy into that bond. So it's a low source of capital. 25-year fixed rate for commercial real estate at 2.93% currently is really amazing, and it's amazing now. It's a great time to do it now, but even 5 or 7 years ago when rates were higher, it's still at the time still below market rate, just the way the program works. Next. As far as the types of businesses that we can work with, it is under the SBA, Small Business Administration, but don't let small deter you. We can do lots of larger companies. We do for-profit companies. The business does need to be in at least 51% of the property. And then as far as the size standards go, the tangible net worth as stated on the business tax return needs to be less than $15 million. And most tax returns are set up that they try to depreciate assets, and they don't have the assets in there at market price. They have it in at the cost. So less than $15 million is usually obtained by these family-owned businesses. And then the net income after taxes is $5 million, again, based on the business tax returns. If those size standards are exceeded, there are some other ways that we can still get an applicant eligible under this program. I don't expect anybody to remember these size standards, but I guess the picture is, or the idea I'd like to leave you with is, don't let small deter you. If you kind of have a question, if your business is eligible, reach out to your First Bank banker. They can contact a CDC in your area, or of course, feel free to contact me, and we can kind of do a quick eligibility to see if your business is considered small by the SBA. So why get this type of financing? We have a general philosophy of if you own the business, you should own the building. And long-term success of the business we've seen many times be achieved by people who own their building. It secures their occupancy cost. It protects them against rising rents. You can build equity as an asset in the property. And you do need to occupy 51% of the property, but that means you can lease out 49%. And so that's good supplemental income that you can have to support your business or any other thing that you need for that rental income. It's also very good for estate planning purposes. Easy transition of ownership. When we're mentioning this, we're talking about at some point you might want to sell the business, but keep the building and keep the real estate for yourself. So there's some good estate planning that you can look into to how you're going to use a building that you've purchased for your long-term estate planning purposes. It's good wealth diversification. Stock market's great, but real estate is also a very good investment. And a retirement nest egg. We've seen many people achieve significant wealth with the commercial real estate that they've purchased through this program. Again, even if they sell the business or transition the business to heirs, holding on to the building can be a very good thing for the family. Some exciting things that are happening with the latest economic stimulus benefit act. Let me back up. SBA has been front and center with some of the recovery from COVID. PPP loans were part of the SBA. We also had EIDL loans, and now the SBA is or the government, I should say, has given some big incentives to stimulate the economy, keep the economy going by providing some benefits through the SBA program. And I think the next slide will go over some of the details of those. Typically, the fees range on the SBA piece, the loan that the CDC does, at 2.65%, and that has been reduced to 1.15%. The SBA typically charges the bank what's called a participation fee of 0.5% of the first mortgage, and that has been waived. So those are some significant fee reductions. Again, you are also getting a rate of 2.93% fixed for 25 years. So that plus combined fees of 1.15% now, pretty good pricing. Also, with the stimulus package, the SBA is providing free payments for the first 3 months of the loan, up to $9,000 per month. So whatever, this is just on the second mortgage from the SBA, but whatever that payment is, up to $9,000 is forgiven. It's not deferred. You don't have to pay it back. And that's up to $27,000 benefit that the government has due to this program. We've talked a lot about purchase transactions, and that's primarily what the SBA 504 loan program has done historically. Over the last few years, they have expanded the program to allow refinance under the current program, and there's some changes that might be coming in the future, but under the current refinance program, we can refinance a conventional loan up to 90% of the current appraised value. We can even give cash out for business expenses. And if you give cash out, the LTV is limited to 85%. Almost any owner-occupied property will qualify. We still have the 51% occupancy parameter. And it still does also qualify for not only the 3 months of forgiveness, but also those reduced fees that are part of the stimulus package. So here's an example of a refinance with cash out. The example shows a $3 million existing loan, and the applicant is looking for $1,500,000 in cash out. This particular property has an appraised value of $7 million. And so with this example, the bank can do a first mortgage of $2.25 million. The SBA would be in second position, also at $2.25 million. And the applicant does not have to come up with any cash injection. Their equity is accounted for in the $7 million appraised value that they already have. Next. I'd like to give one example of a deal that we did with First Bank. It was a great solution for this business who needed cash out. They had a great warehouse property that stores boats, as you can see in the picture. And we were able to give $1.2 million in cash out that was used for the business expenses. He had some needs for that business or for that working capital, and it worked out really well for the applicant and the bank. I won't touch on this one too long, but we also offer financing for some unusual properties that sometimes don't fit in conventional lending, hotels, gas stations, things of that nature. Assisted living facilities is another good one that we can do financing on. Any type of special purpose property does require more injection from the applicant. So we can finance up to 85%, and sometimes it's only 80% for these unusual type of properties. Another example is an applicant in Oakland called Fastsigns. They're a franchise. They started off small with a $715,000 purchase. She was running out of space. She knew that rents were rising, and she wanted to fix her occupancy costs. So she bought her first building in 2017 and used SBA 504 to do that.
Kurt, before we move on, quick question here. Is there a cap either on the number or dollar amount of SBA loans at any one time to a borrower?
Another good question. There's no limit to the number of deals that an applicant can have. So we've had some applicants or some borrowers that have 5 or 6 SBA loans outstanding. There are some limits in regards to the aggregate amount of SBA dollars that somebody can have. what I call is a soft cap. There's a soft cap of $5 million, and that is based on the SBA piece of the financing. So if you think of the original example we had of a $5 million purchase, bank was at $2.5 million. The SBA second was at $2 million. So that's the piece that would aggregate to the $5 million max. So that person got a $5 million loan, has $2 million SBA loan, so they would still have $3 million available in more SBA financing. If somebody has exceeded the $5 million or at the $5 million level, there's some ways to even get more. One, if the small business is a manufacturer, they can get more, or if it's not a manufacturer, they can go green. And by SBA green, that means including energy savings within the project, such as solar panels or energy reduction. There's some ways to get even more than $5 million. We have some applicants that have $12, $13 million outstanding with SBA now. And then back to Fastsigns and Linda Fong, we did a short 2-minute video that I thought you guys might find helpful. So we could play that now.
I am a Fastsigns owner, and I started Fastsigns in Oakland in 1995. Our center is probably the top 5 percentile of 660 locations worldwide.
Linda is from Oakland, and she's very proud to be an Oakland resident, and she's extremely happy to have a long-term property for her business here in Oakland.
I think people are now discovering what a beautiful city it is. I grew up in it, the diversity, the people, the environment, the weather, the architecture. With Oakland growing so fast, we were worried about getting priced out of the area.
The real estate market in Oakland, availability is scarce. She knew that it was going to be a challenge. So she found a building, decided that buying was the only way to go. Leasing would be too risky. We were able to help Linda purchase 2 commercial condos in Oakland with only 10% down.
I'm excited. I think that everyone should have their own space. This building now gives me peace of mind. I can just concentrate on growing my business. We're up 25% over last year. In our old production facility, we were just basically on top of each other. It was like a traffic jam. And now we actually have a workflow. It's already made a huge difference. Working with Kurt and Anna was amazing. They kept me in the loop. They were on top of things, even when I wasn't. And it was easy. I do it in a heartbeat again. Having our own building, being in the city that I love, has just been an amazing journey.
Okay, that's not an unusual situation.
Yeah, it looks like you're muted, Kurt. Sorry, can you unmute yourself here? 1 sec.
There it goes. Yeah, I was clicking the button, but it wasn't taking. Anyway, Linda's situation is not unusual. We found many business owners, once they buy that first building, they really understand the benefits, and they want to buy a second. So it's a really powerful program. And the next slide, if you guys, business owners, family business owners out there, have interest and need, talk to your First Bank relationship manager. They'll get the process started, and they'll connect you with a local CDC that can help you answer questions and apply for the program. So that is our presentation, but hopefully there's some questions and discussion that we can have at this time.
Kurt, thank you. I encourage all of those in attendance in the audience, please submit your questions to the function. We have Kurt for a few more minutes. And certainly, as you've seen through his presentation, a valuable source of information about SBA 504 and what he can do for your business and what First Bank can do for your business. So please submit your questions.
All right, so again, if you have a question, just go ahead and type it in the webinar chat. While we're waiting for that, Kurt, any other kind of final thoughts just to kind of wrap us up a little bit while people might be typing in questions?
Sure. I'll just kind of touch upon the demand. I think it's an interesting situation where we are in the economy and where many businesses are feeling. As we come out of the COVID situation, I find it fascinating that there is such a strong demand for this program across the country. We got a notice on Friday from the SBA that between March 1st and April 30th, they had over 2,000 applications submitted to the center for approval. And that's double what they're up against. Downside to that is that they're more busy and they're not really staffed for that, and they're taking longer to give their decisions. So that does need to be factored into today's environment if you're in a purchase transaction. However, I think it's just illustrating to show how many businesses out there are confident with the future and do see now as a very good time to buy a building. A common question that I've received in some discussions is, can you include tenant improvement work to a project? Oftentimes people are buying a building and they need to do $200,000 or $400,000 worth of work to the property. We can roll that into the financing so that the project is inclusive of both the purchase price and those improvements, and the applicant comes in with 10% of that bigger number.
Great. Kurt, we have a few questions coming in now. First one, can you run across the fees again? What's involved with the bank, the SBA, and so forth? And then you did speak about a moratorium on those fees and some other benefits too.
Yeah, I'll start with the standard fees that are typically charged without the stimulus. So usually there's a fee that the SBA charges to the bank on the first mortgage of 0.5% of the first mortgage amount, and most banks pass that fee along to the applicant, so 0.5% of the first mortgage. And then on the second mortgage, the typical fee is 2.65% plus a $2,500 attorney fee that works with our closing and closes the loan for us. 2.65 sounds high. I mean, if you compare it to conventional bank financing without the SBA, 2.65 is definitely a significant number. However, when you couple it with the 2.93% fixed rate, you can do what's called a rate fee analysis and basically back into that, showing that really if you amortize that fee over the term of the loan, it's not that much higher of an overall rate. That being said, up and through the end of September, these fees have been dramatically reduced by the stimulus program. So the SBA does not charge the bank on that 0.5%, and the fees on the second mortgage have been reduced from the 2.65% to 1.15%.
Okay, great. Another question. What you covered here, most of what you covered this morning, has been related to owner-occupied real estate, 504 loans. And you did speak about some other types of equipment that can be financed through the 504. But the question is, do you work with businesses to purchase businesses also? Do you do acquisition financing?
Not under the SBA 504 loan program. There's another type of SBA program called SBA 7A, and the 7A program is what can be used for debt refi, like regular debt refinance, not commercial real estate debt refinance, but just in general, debt refinance, working capital, startup costs, business acquisitions, those types of needs are financed under the SBA 7A loan program.
Okay. Are there loans available through the 504 program for standalone renewable energy financing program?
I've had some requests. I mean, basically, we would still need to look at the underlying business, and if the business meets the eligibility parameters of the size standards, and it's usually we like the business to be around for at least 2 years. If it's let's say a solar farm that produces energy and sells the energy, that could be eligible, but so sometimes those types of businesses get complex and they don't meet the SBA standards.
Okay, great. And then let's talk about lead times for a second. We know that the SBA has been certainly engrossed and tied up with the PPP process and all of the programs that have been out during the pandemic. What typically is kind of the lead time, the process, the steps, and so forth to get to an SBA loan?
Historically, we always advised buyers to have at least a 45-day financing contingency, and that allows us and the bank to do our credit underwriting, have an appraisal done, have an environmental report done and reviewed. And so typically within that 45-day period, we can get all of our approvals in place, and then maybe another 2 weeks or so to close escrow. So 60-day escrow was a typical amount of time. Now that SBA is so busy, we're saying at least 75 days, and sometimes even more, but at least another 2 weeks on top.
Okay, great. I guess a follow-on question to that is, you talked about the documentation. What type of information does the borrower need to supply to First Bank RM to get the process started?
I would think, I'm pretty sure that it's not going to be anything much more than what First Bank would want from a conventional loan request. We typically ask for 3 years of business tax returns, 3 years of personal tax returns. Anybody that owns 20% or more of the business or the entity that's going to take title to the property does need to provide a personal guarantee. So we would ask for their personal financial statements and things related to the businesses that those people own.
Okay, great. Question: does TMC work with SBA 7A loans?
We do not. SBA 7A loans are typically provided by a bank, and the bank happens to get the guarantee from the SBA, but we don't offer those types of loans.
Okay, great. That seems to be the last question. Any closing comments, Kurt?
It's a great program. I think that there are some hesitation sometimes by people wanting to access a government program, but this is a program that, in my opinion, number one, we don't use taxpayer subsidized money for the loan funds. The source of our funds are bonds that are sold in the market. It's a way to bring Wall Street bond pricing down to a small business, and by leveraging the SBA program, it really has a big impact on small businesses and their long-term success. So I encourage everybody to consider the program and consider buying a building if your business needs one.
Great, Kurt, really appreciate your time this morning. Some very valuable information, and hopefully our audience enjoyed that.
Yeah, thanks so much for that time. So if I could, there's a survey that's going to pop up here in a moment. Please do fill that out. We really love your feedback. And with that said, let me turn it back over to Joe Ambrose to officially close us out today.
Thanks, Mike. Thanks, Kurt and Jim, for your presentation today. It was great. And thanks to everyone for joining us. Please don't forget the survey. Please mark your calendars for June 8th at 11 a.m. Central Time. Our own David Frederick will lead a panel discussion on the role of philanthropy in family, business, and community. Until then, stay well.